Ratnamani Metals. Now, that company has reported a strong set of numbers, and to get a more on how the business and the demand outlook looks like and what could be the order book pipeline, Manoj Sanghvi, the business unit head of Ratnamani Metals and Tubes, joins us. So, sir, firstly to start off with, you achieved a 1500 crore rupees quarterly run rate in the fourth quarter of FY23. Now, going forward, is this the normalized run rate for the company?
1500 crores is the highest we've done till date. Whether it's sustainable or not, it is difficult to say on quarterly basis. But yes, on an annual basis, we see a growth of 10% on our current numbers. That's what we've budgeted. We've budgeted close to 5,000 crores. One-off quarter can go to 1,500 crores. But year on year, 5,000 crores plus minus 5% is what we've budgeted for this financial year.
Okay, so 5,000 crore revenue guidance for FY24 and 10% volume growth is what you're expecting. But let's talk about the order inflow position as well. What's been the trend like? What are the segments that are driving growth? What's the current order book?
So, the current order book is close to 2,500 crores, which is almost 50% of what we've budgeted this financial year. So, yes, it has gone down a little, but only because there's a little muted demand for line pipes, carbon steel line pipes. However, the process pipe demands for stainless steel as well as carbon steel is good. We hope to be catching up in next quarters, and we are hopeful that going forward, we see, although in the line pipes, oil and gas, the demand is less, but we see water picking up going forward.
Also, if you could tell us about the margins in the fourth quarter, the margins were at 20%, and is this margin rate sustainable or expected to trend back to around 16 to 18% level?
This quarter has been outstanding in terms of utilization of capacities. All the segments did very well, but our long run guidance on margins would still be 16 to 18%. As we are increasing capacity in other two segments, not all segments we foresee that will do outstanding every quarter, but still we try to maintain the margin between 16 to 18%. That's the long run margins that we should expect.
Sure. So the margins are expected to trend back to 16 to 18% over the long term. But talk to us about export as well. The contribution was close to 20% in the year gone by. What could that figure look like in FY24?
So on the overall number, we still feel that exports will remain between 20 to 25%. However, on the stainless steel segment alone, if we see, our exports are close to 40-45%. Carbon steel, one project you get and the exports can be 30%, 35%. However, looking at the current situation, the guidance that we can give is it will remain between 20 to 25%.
And what's the current capacity utilization levels in both stainless steel and carbon steel segment? Any capital expenditure plans that you have going forward?
So capacity utilization, if I put stainless steel and carbon steel products, both the segments, we are utilizing capacity between 60 to 80%, depending on the product, except for the two capex which had happened previous year. That was for LSAW and stainless steel extrusion. Both LSAW and stainless steel extrusion capacity utilization is close to 30%. Rest all is between 60 to 80%. So that we should expect to be operational by the first quarter of next financial year. And on the other hand, for carbon steel, we have one spiral welded plant and a coating plant coming at a different geographical location. That too we should expect to start commercial production from first quarter of next year.
Well, thank you, Manoj, for all those details. That was Ratnamani Metals giving us an idea of how the business could look going forward.